You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. And from our studios in Las Vegas, Nevada, Mr. David Williams. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Monday, 5th day of October, 2015. So good to be back. Friday was a day from, well, a place you don't want to go. So there you go. Here's the numbers. Are you ready? S&P. These are cash markets. S&P is up 26 points. The Dow Jones Industrials are down 216. The NASDAQ is up 51. Russell 2000 is up 18. Put it all in perspective, the S&P and the Dow are up roughly 1.25%. Okay. Crude oil up $1.20. Surprisingly, since Saudi Arabia said they are awash in oil and we're going to increase production on top of that. So we'll talk more about that in the show. Today, gold is down $2.40. We're all green in Asia. The Nikkei up 280. Shanghai up 15. Hang Seng up 348. And can the European markets follow suit? They can. Just green, and more green. The only red on the screen, matter of fact, would be gold. That's it. And it's only down $2.40. So we've got the DAX up 261, which is 2.75%. The FTSE up 168 points, which is 2.75%. And the CAC 40 up 158, which is 3.5%. So, big bull Monday. All I can say is watch out for turnaround Tuesday. Yeah, I know they usually use that going the other direction, but yeah, these are some pretty lofty numbers. Just when they say it can't go any higher or the top is in and now you're seeing the bottom fall out. Well, here you go. Now, last week we saw all of the major indices go negative for the year. And I said we're closing in on the year. And I said, ooh, this sets the stage for the Santa Claus rally of all time, right? Because all the institutions and the money managers and the fund managers and all of the guys whose end of the year bonus is based upon either the benchmark of the S&P or whatever it's tied to, it's got to be up so many % on the year, and that determines how many commas they have in their bonus check. So are they going to work really hard to do whatever it is they can to convince their investors, stockholders, believers that it's not over yet? In fact, it's just getting good. So you need to buy. Or as Jim would say, buy. But we don't say that. We just say buy. But we're not saying buy. Don't get me wrong. I'm not saying buy. I'm not saying don't buy. I'm saying that if you followed our instructions last night and you chose to go long the S&P 500 at 1953, that did work out quite well for you. It did. Is that 53? That's almost 53. 53. Okay, what's so special about 53? Well, I'm not going to tell you that. I'm just going to tell you that that's where our alert was last night to be long the S&P 500 Emini Futures. 1953. So, our swing high so far on the session, and that was very little drawdown on that. Got up to 69 so far. So 53 and 63, about 16 S&P points times $50 per point. That's good work if you can get it. I'm reading your message here, Jeanette. Well, I can look into that for you. How long has it been since you logged in? I haven't changed it, so it should be working.
I'll go check it.
Okay. Michael's going to check on it for you. Okay, so those are the numbers. I hope you had a great weekend. It's a little overcast here today, which is always nice. We don't get a lot of overcast in Phoenix, but they say we've got a major El Nino coming our way this winter, which means it's going to be wet and rainy most of the winter. So that's good, unless you own old historic buildings, and sometimes it's not so good. But anyway, we're happy to have the rain. And it's nice to just see some cloud cover. Now, I hope where you are, that you had a great weekend, that you spent some quality time with your family, and you're ready for a new week. I have up a chart of the S&P 500 Emini Futures. If you are unable to see the chart, go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone, follow the instructions. Within about 30 seconds, you'll be registered, and you'll not only hear my voice, but you'll see the charts that we display throughout the entire radio show today. You'll also be registered through the end of the month. In other words, you're going to get an email each morning reminding you the show starts at noon, and you can join the show with one-click access. Okay? Sometimes those emails don't show up when you want them to show up. Here's a little secret. It's the same link every day for the entire month. So when you sign up and you get the link, you could just save that. Or you can go to your contact list and you can add Citrix.com and also CitrixOnline.com to your contact list. And that will assure that because we pay them to send you an email every day to remind you that the show starts at noon. If you have added them to your contact list at Citrix.com, at CitrixOnline.com, those emails will literally fly right into your inbox, and you won't be able to miss them. So it's a great way to do that, and you'll never miss another show. Okay? All right. You'll also have access to the chat box. No, Michael, YouTube is not up and running today. I have some work to do on that. It'll be up and running again tomorrow. But thanks for checking. And I apologize that I wasn't able to get it up for you today, but it'll be up tomorrow. In case you didn't know, we stream the show live on YouTube. We are a live event on YouTube each and every day, Monday through Friday, from 12 noon to 2 p.m. Eastern. And we'll be back up and rolling tomorrow. I would take a stab at it today, but I don't want to crash the whole radio station again like I did on Friday. So, little baby steps. I got a big shout out to Raj. He left the trading room Friday morning to come to my assistance, and he taught me a lot. I thought I was pretty geeky and knew a lot about computers, and come to find out, he really knows a lot. He took me places I'd never been inside of my computer, and we're talking software. It all began with an innocent little message that said, there's a lot of updates you've not downloaded yet. Wouldn't you like to update your computer? There's a typical Microsoft update. Now, I have my system set up to not allow the automatic updates, the kind where you come in the morning and your computer's just like wiped out, because I don't want to have what happened on Friday happen. Thursday night, don't know what I was thinking, but I thought, there's probably some really important security updates out there that you actually do need, and so why don't you get with the program and go ahead and let the thing update? Well, it got about halfway through and failed. Well, that's not good. Then I did it again, and I thought it was okay. But then when I woke up on Friday morning, I found out it had rebooted itself. However, there was no more internet, There was no more connecting with the outside world. And when you went into Windows updates, it said, well, you got a ton of updates that didn't install. And anytime a Windows update hangs up in the midst of an update, it leads to major problems. We had to go through and turn on all kinds of services. We had one by one troubleshooting. Okay, it turned this one off, we got to turn it back on. And in order for this one to work, this one's got to be on. And in order for that one to work, this one over here, it was quite a puzzle. But Raj was right there, man, and he never got discouraged. And he hung in there with me. And lo and behold, ta-da, here I am. Needless to say, I won't be updating again anytime soon. I will run this until it stops working, and then I will, I think I'll buy an Apple. I don't know. I have an Apple G5 downstairs that I never really learned how to use. The iPhone, the iPad, you don't need to learn how to use those. They're just so intuitive. You take them out of the box and they just work and you just use them. But an Apple computer, an iMac, that's a little bit different. You really do need some kind of tutorial, a little bit of help to get going. Now, they could do great things, but mine has set, the one I have, it's an old, I think Steve Jobs built that one. We bought it in 2005. Speaking of Steve Jobs, the new movie comes out this Friday. Now, unlike the Ashton Kutcher version, which Apple, the company, liked and critics panned, this one coming out Friday night is the one that Apple hates. In fact, his wife, Steve Jobs' wife, tried to get a cease and desist order on this one and shut it down. But this one is based off of the book, the official biography. Steve Jobs hired Isaacson to write the true story. I think because Steve had touched so many lives in so many ways and done so much that he did not want someone to mistell the story of who Steve Jobs was. I mean, in the book, if you haven't read it, you can grab it as an audiobook from audibletrial.com/CFRN as our free gift. It takes 27 and a half hours to listen to it. Big book, okay? I don't know how long it would take you to actually sit down and read it, but that's how long it takes to listen to it. Steve is brutally honest with Mr. Isaacson, with himself, and with whoever chooses to read the book and listen to the book. And of course, Apple and Steve's wife are afraid that they are going to take Steve's own brutal honesty about himself and use that to create a Emmy or Oscar or Grammy, an Oscar-winning movie, I guess it is, or a Golden Globe, or whatever it is they give you for a really great movie. This is probably going to get it. If you've seen, there's 2 trailers out, which I've seen either one or both on TV. One is about the paternity suit where Steve Jobs initially denied this daughter, this young girl who was his daughter. Now, those of you that were listening to the show back when the autobiography first came out, and I first downloaded it from Audible, our sponsor, and I listened to the entire book, I was pretty honest with you, and based in his own words, he was not a real nice guy. Okay. The amazing thing is, although he was ornery, cantankerous, brutal, mean-spirited, much of the time people still loved him. Was it the spark of genius, the twinkle in his eye, the money he had? What was it? Why did people love this guy so much when he went out of his way to just be ugly to a lot of people for no reason? Some of the people who cared about him the most, like Wozniak and the others. You're going to go see the movie. You'll either see it in the theaters or it'll eventually come to your Netflix, your Amazon Prime. You'll get a chance to see the movie. And that's what Apple is concerned, that it's going to color in a negative way the legend that is Steve Jobs. Well, I got news for Apple and Tim Cook and Miss Jobs. This is exactly what Steve wanted. This is why he hired Isaacson. This is why he could have told him anything, but he told him the truth. So I look forward to it. I'm not a guy that goes to the movies and pays full price to see a first run movie, because I know that if I'm just patient and wait, it will come to me. I just might splurge and go see this. So hopefully it's not a 27-hour movie, because I can't do that. All right. Here's what we're going to do. Michael's going to come in, give us a recap of everything that happened in the live trading room today. I'm assuming he already recapped you back on Friday. Oh, and along with thanking Raj, let me thank Michael and David. They picked up my fumble and carried it into the end zone. I understand that the show did go on, that there was real live radio on Friday. You got a recap, you got to chat with David for a bit, and I thank you guys both for doing that, and I'm forever indebted. So today Michael will come, he'll do his recap of everything that happened in the trading room today, then he'll go. I'll be back with our good word for the day, our concierge trade alerts from last night, and I'll also take a peek at the ones from Friday that I did not get to recap with you. And since I didn't get to recap them with you on Friday, I did a complete recap on the Google Plus page. And in case you don't know how to get to the Google Plus page, I'll show you when I come back, okay? It's all there. I did the charts. I did an explanation. I gave you the whole 9 yards. Now, when you look at what happened on Friday, and when you look at what happened today, if you are not trading the Concierge Trade Alerts, then you're going to only have one question for yourself, and it's a one-word question. Why? All right, and then we'll talk to David from PageTrader.com for his forecast from the edge. And then, today being Monday, I don't have an email yet or a text, so I believe that my co-host, my every Monday co-host, will be joining me at 1:30 p.m. Eastern. So with that, Michael, if you are ready, sir, take it away.
Okay, I am ready. Yeah, hang on. I'll fix this in a little while.
You need me to keep going?
No, I can do it. There's just something messed up with PayPal. But I got it. I got it. All right. I'll take it.
Okay.
All right. You should be looking at our homepage. There it is. Okay. I am ready.
Okay.
we go. I'm going to hit the record button.
All right, I'll hit mute. It's all yours.
All right. Thank you, sir. All right, good afternoon, everyone. Today is Monday, the 5th day of October, 2015. To take our free trial, you just need to go to our home page right here. Go to the home page, and on the home page, in the right-hand column where it says register for a free trial, put in your name, put in your email, click on register for a free trial. When you do that, you'll be sent a confirmation link. You must click the confirmation link, okay? If you don't click the confirmation link, you do not get the free trial, all right? That confirmation link is the thing that lets us know you took the trial, all right? So that's how you take the free trial. Now, our results in the live trading room, to get to them, you click view live trading room results and then click there. And scroll down to the bottom, way down here at the bottom. I think I'll just drag it, it's faster. Way down here at the bottom. There is this right here. All right, on today, on the 5th day of October. Today we made 3 ticks in the Russell, we lost 8 in crude, and we made 15 in gold. All right, the markets are pretty flat today. The recap isn't going to take all that long today, I don't think, because well, we didn't take that many trades, really. It took us 10 minutes and 3 trades to get to our goal for the day, which was $100 a contract, and we took a total of 19 trades. So on the month, we are now up $1,495 a contract. That's over 3 trading days, and we're averaging $498 a day for the 3 trading days. Obviously, we've had pretty good 3 days here. Well, today not being the greatest, but the first 2 days we're averaging $695 a day. Last month, we were up 6,100, just about 6,200, averaging $295. So your net profit if you had an $8 commission would be $935. Your net profit if you had a $5 commission would be $1,145. On the year now, we are up $49,427.50. That's over 185 trading days, averaging $267 a day. Okay, averaging $267 per day. That's it. That's where we stand on the day, on the month, and on the year. All right. Now, let's see here. The J and the S are lowercase, Jeanette. The J and the S are lowercase. All right, so the trades. I'm going to start out with gold. All right, gold is where we made the majority of our money today. And let's see, we had 5 trades in gold. We got our goal for the day here on gold. Now, in the pre-market, gold had a couple of nice runs right here. You see that? This one right here being the best. Over here was our initial short trade. This is where we got our goal for the day, I believe. It took us 3 trades. Yeah, this is where we got our goal for the day. It was right here. We got 10 ticks profit on that one. All right, 10 ticks profit on that gold trade. The next trade was a break even. Then we stopped out, put us back down to -2. Then we got another 10 ticks right here, put us back up to +12. Missed a couple of nice trades right here. Beautiful trades, but I was going over the trade setups at that time. That's why we missed them. Right over here, we got 3 ticks profit on this one, putting us at +15. And that is where we ended the trading for the live trading room. There was one more short trade right in here during the break. This moved down, capture that move down. Okay, and that was it. On the gold, we were at +15 on the day on gold. The Russell, we had quite a few trades here on the Russell today. Let's scroll back. We ended with +3 on the Russell. All right, let me get rid of some of these drawing objects that are hanging us up here. All right. So this was our first trade of the day on the Russell. We stopped out -8 ticks. Our next trade on the Russell was right over here. We got 4 ticks profit there. 4 ticks profit there, putting us at -4. We missed that one and that one. And then we had a break even here. We missed that one, and we got 1 tick on that, putting us at -3. 4 ticks there, putting us at +1. We missed that one. Somewhere we missed another one in here that I didn't mark. I think right in here we had gotten 2 more ticks. I think it was right in here. We had gotten 2 more ticks on the Russell to put us at +3. And that is where we ended the day on the Russell at +3. Okay, now during the break, let's see, during the break, there was a shorting opportunity right here, though I probably would not have taken that because we did not have a lower swing in place. So I would have let that go, and I would have waited for this one down here, okay, or this one over here. Change directions, and yeah, there was a long trade right in there, and another long trade right in there. And nothing there, and a short trade there, and that was it during the break. Okay, so there were a few opportunities during the break, and a few opportunities during the live trading room. You know, the markets, they weren't. You see how sideways it is right in this section right here, and right through all of this section right here. There were not a ton of opportunities today. And we did what we could. All right, on crude, our first trade was right here. It was a break even, or I'm sorry, it was +1 tick. No, that was a break even. I'm sorry, that was a break even. Then we had we missed that one there. We took 1 tick profit here. We were +1, and right over here we lost 8 ticks, so we're at -7 at that point. Then I messed up a trade right here. Okay, I messed that trade up and I lost 4 ticks on that, putting us at -11. Then I got 3 ticks profit over here, putting us at -8. And that was where we ended on the crude. Let's see. There was another shorting opportunity right in there and there. And the cycle was going up too steep right there, so I missed a couple in there, and the cycle was going up too steep. Then during the break, well, right in here, you could have gotten long right there, 1 spot in there. And during the break, there was a shorting opportunity right here. And that was pretty much it on the crude. Okay, we were -8 on the crude on the day. Soybeans, we just took this 1 trade right here. The beans were, I had drawn this box, and I said we need to see the beans get out of this box. And they finally got out of it a little after 11. They got out of it, and we took a long trade. Once we took the long trade, hang on. Yeah, once we took the long trade, we waited on that forever, and I finally just put my stop at break even. It ended up working out pretty well, but we're getting to the end of the live trading room, so I put my stop at break even, and it took me out of break even. Okay. On the ES, let's see, we took a trade here on the ES, right over here. We got long on the ES here, and we ended up with a break even on that. There was a shorting opportunity there and a long opportunity there, but that was it on the ES. And John, the natural gas, I don't even know if I have a natural gas chart up. Let me see. I haven't looked at it in a while. And no, I do not have a natural gas chart up. And that was it. That was it on the day for us, guys. We were break even on the ES, break even on soybeans, +15 on gold. Oh, here, we can do it this way. We're +3 on the Russell, break even on beans, didn't take natural gas, -8 on crude, +15 on gold, break even on the ES. And we took 10 minutes and 3 trades to get to $100 a contract, and we took a total of 19 trades. Okay, So on the month, we are now at $1,495. That's over 3 trading days. We're averaging $498 a day. Okay. So on the year, we are up $49,427.50. That's over 185 trading days, averaging $267 a day. Right, $267 a day. If you have not taken a free trial with us and you would like to take a free trial with us, then you just need to go here where it says to our homepage at CFRN.net, where it says register for a free trial. Put in your name, put in your email, click on register for a free trial. When you do that, you'll be sent a confirmation link. Okay, click on the confirmation link and you will get all the information you need to take a free trial. Okay, that is it. All right. With that, I'm going to stop the recording and we can head back out to Phoenix, Arizona. If Phoenix is out there. Hey, the euro finally started to move a little bit. Okay. Phoenix, are you there?
Yes, we are.
Okay. I am ready for you. Just looking at this euro. I stopped looking at the euro and switched to the ES because, well, the ES was starting to get volatile, and the euro was not. That is why we stopped looking at the ES a while back. That is just weird. We received something. All right. Dwayne, I think, is on the phone because the phone was just ringing, but he took the charts back.
No, I'm back. So anyway, what were you saying? What's up?
Oh, okay. I wasn't saying anything.
I thought you said we received something.
I'll take care of it. It's in PayPal.
Okay.
I'll take care of it.
All right.
It's all good. Yeah, I was saying that we had no volatility in the euro for a little while. We had a ton of volatility in the ES, so I switched back to the ES. That's what I'm saying.
Okay. All right. Thanks very much, Michael. Okay, we got the charts back here.
Yes.
All right, guys, let's go to our good word for the day. Let's take a quick look there. Get over it. Proverbs 17:9 says, "He who forgives an offense seeks love, but he who harps on a matter separates friends." Sometimes people do us wrong. Situations do us wrong. Sometimes life's just not fair. So, what do we have to do? Get over it. Countless friendships are destroyed because one person gets offended by something the other one said or did. A mark of spiritual growth is how quickly you get over slights and insults. The more mature you are, the less time it takes to forgive an offense and move on. One Christian writer says, okay, your friend ditches you and your feelings are hurt, or she's too busy to return your phone call or email, or you're out to dinner with another couple and the other man insults your husband in an attempt to be funny. Offenses come. It's gonna happen. Jesus said they would happen in John 16:33. These things I have spoken to you, that in me you may have peace. In the world you will have tribulation, but be of good cheer. I have overcome the world. People are people. If you've been offended by a friend or felt slighted in some way, then get over it. Hit Control Alt Delete. And by the way, that didn't work Friday. Nor did a couple of people said, well, why didn't you just restore the machine to an earlier time, which is a great suggestion and a great idea, because it wouldn't do that, unfortunately. So in life, when we're offended, hit Control Alt Delete, clear the screen. Sometimes you have to hit the escape button too, and move on to the next screen or the next scene in life. If you've been offended by a friend or felt slighted, one more time, best way to deal with it is get over it. Don't let bitterness even think about putting down roots. Love is not irritable. It keeps no record of being wronged. Love never gives up. Love endures through every circumstance. 1 Corinthians 13:4-7. Love is patient and kind. Love is not jealous or boastful or proud or rude. It does not demand its own way. It is not irritable, keeps no record of being wronged. It does not rejoice about injustice, but rejoices whenever the truth wins out. Love never gives up. It seems impossible, and without God's love it is. So yield to His love. Overlook offenses and walk in love, because next week you'll be the one needing some unconditional love. When it comes to being perfect, we've all failed. If you want your friends to overlook your offenses, well, be quick to overlook theirs. Because I got news for you, none of us are perfect. Period. Make this your prayer today. Father, thank you for the relationships you've blessed me with. I make a decision today to release anyone who has ever offended me in the slightest, to overlook it, to forget about it, to move on. I will not keep a record of their wrongs. I will offer mercy and unconditional love. In Jesus' name, amen. Now, if you prayed that prayer with me, you got a clean slate, right? You should feel better. You just let a lot of stuff go. Because when you hold a grudge, when you have aught with your brother, you're not causing him any pain. You're the prisoner. You're the prisoner of your own anger, your own begrudging attitude. So, while it sounds good to let them off the hook, that's the high road. I'm going to let you off the hook. No offense. You're really letting yourself off the hook. Okay? Instead of having to take the high road between me and you, you're taking easy street. All right? And that's okay. Because the whole point, as Jesus said, when he left, after all he said and did, from the virgin birth to the cross, He summed it up with this: love God, love people, you'll be okay. I'm going home. He did not say, contrary to popular belief, that's my show, good night. No. He said, I'm going home. And he left. And he was gone. So that is our very good word for the day. All right. Let's look at the chart. It continues to grow. S&P 500, Emini Futures. We now have a high on the day of 1970.50. From 53, if we get up a couple more points here, we'll have a 20-point S&P day. And a 20-point S&P day turns into a 200-point Dow day, typically. 10-to-1 ratio. All right. Let's go to the other charts. Here we go. Okay. Another ES chart somewhere. Where was that? Oh, I guess it was the one I just had up. I wanted to point out to you. This was Friday. I was going to drop a little just to give you an idea. There we go. That's the Globex Open last night. Friday's close just above the weekly zone at 1940. And someone in the chat room had asked, was 1940 the highest weekly zone last week? No, it was not. The highest weekly zone, well, we had a zone at 64.65, and then we had a zone at 1999/2000. Okay, that's last week. So, in keeping with your question, I should probably, if I'm going to show last week's zones, I should probably show last week's zones. I just didn't have them up because we didn't get there last week. The zones are never a prediction that we're going to get there. It's just that if we get in that neighborhood, we expect there to be one of three things: consolidation, rejection, or what looks like a hot knife through butter on an hourly chart. So see, 1, 2, we'll give it 2 hours of consolidation as it moves on. And then the next would be 1999/2000. Right up here. Now that's from last week, okay? These are last week's zones. I guess I should put that up here. But on Friday, check out what happened on Friday. We had an alert to be short, because I wasn't here to show you this on Friday. We had an alert to be short 1909. It dropped like a hot knife through butter. See? That's what that looks like. Consolidated at the zone 85.86. From 1909 to 85.86. That's a nice move. That's 24 points. Okay? We then did an about face, went back to the zone where we did the hot knife through butter, and consolidated for an hour. That's what we expect when that happens. We then moved up to the next zone, consolidated for a couple of hours, and then in the, not the final hour Friday, but the next second from the final hour. That would be from, let's see, 2 to 3, from 2 p.m. to 3 p.m. This is the 3 o'clock hour. And this was in the 3 o'clock hour. Right. Okay, this little carry over here, that's the 15 minutes the futures continues to trade. So it was the final hour on Friday. We raced from zone to zone. We triggered the alert at 1928 and ran all the way up to 39.40. Okay, from 28 to 39, it's 11 points. The first trade of the day was actually along at the 28, went 2 ticks in our favor, and then you guys stopped out. Okay, so a stop out, followed by a whopper, followed by a late day rally on Friday. That's a whopper. Okay, and now today we haven't triggered on the short side. We did have an alert to be short. See the swing low on the opening candle last night is 37.25. The alert last night said to consider being short below 1937. Okay, we see that a lot. We'll come down and touch a number and bounce, or we'll get with it a tick and then reverse. Important prices, important areas. Always remember. Then over here we come back and we put in a swing low at 38. So again, it makes a move, it reaches back, leg, retrace, leg, and then it just, there's been virtually no retracement today. Not that can be seen on this hourly chart. But we have gone from 53 all the way up to 70, 75. Strong, strong market. Okay. Let's take a look at the other markets. We just covered the S&P, so we're good there. Let's go to bonds. On Friday, we had an alert to consider being long 30-year Treasury bonds, 158.06. At 159.06, that became $1,000 per contract. And up here at 160.06, it became $2,000 per contract. So on Friday, we had a $2,000 per contract move in the bonds based off our alert to be long above 158.06. Now, do we expect you to hang in there and capture all $2,000 plus? No, we have no expectation of you other than to recognize that this is the point where we recommend getting long. That's our best trade on the long side. We expect you to use a hard stop and then trail the market until the market takes you out with some profit. The other option is you can have a hard target up here. And once you hit your hard target, once you reach your goal for the day, then you're done for the day. Whether you're trading the 2420 blueprint, just looking for that $100 per contract per day, or if you're reaching for more, the volatility that we have in the markets right now certainly makes more a possibility. Today on bonds, our alert said to consider being short below 158.09. We've put in a low now at 157.17. When I calculated this earlier, I'll just get rid of that because that number's no longer valid. We had 19 ticks. That's when we had this little double bottom. We had a little double bottom going on for a moment at 22. Was it there? Yeah. So this low here at 157.22, that gave us 19 ticks. And so from 22, we've now dropped down to 17, so that's another 5. So we've got 27 ticks so far. How many do we need? Well, 4 ticks gives you $125 per contract, okay? The daily goal is $100 per contract per day if you're trading the 2420 blueprint. If this continues down as stocks continue higher at 157.09 right there, that will make this move to the downside worth, you guessed it, $1,000 per contract. Okay. Crude oil. We already hit $1,000 per contract today. The alert said to consider being long above 45.90. Now, there were a couple of opportunities to just take your points and be done for the day. There were opportunities to take your points and then some and be done for the day. And there was the opportunity to just hang in there and go for the gold. Okay. On the euro, we said to consider being short below 11.250. We've put in a swing low at 11.185. How many ticks do we need? 8. 12.50 per point, or 12.50 per tick, times 8 gives us our $100 per contract per day. Okay. Soybeans, we need 8 ticks. We had 8 ticks plus right there in one smooth move. On the Dow, I'll let you do the math. Long above 16,395. Okay. You had a couple of small moves and then the reach. Okay. Now, trees don't grow to the sky, and a rubber band will only stretch so far. Doesn't mean the move's over, but this move is going to take a rest at some point. May not be until after the market closes today, but there'll be a retracement. And we'll watch that retracement to see if it's just a retracement, is it a deeper retracement, or is it in fact a reversal. The Russell, we said to be long above 1122. We got up to 1130. That's 8 points or $800 per contract in the Russell. Okay. And last but not least, gold has triggered in neither direction today, but back on Friday, we triggered on the short side at 11.08 for a $4 drop, which is $400 per contract. And then we had the mega move, which ran up $26. Gold was up $26 on Friday in my absence. That works out to $2,600 per contract. That's if you hang in there and wring out the very last tick. We don't. We don't know how to do that, okay? We know how to get in. We know how to trail and let the market come back and take us out with some profit. And we know how to put in a hard target and pray we get there, right? This business of getting out at the final tick, yeah. I respect anyone who has that capability, who has that ability, and I'm eager to take your class. Okay? All right. We're going to go to Vegas, do the Vegas thing, talk to David from Page Trader. We're going to pause for just a brief station identification, and then we'll be right back. So don't go away. Don't touch the radio dial, because we will be back.
You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 928-3310.
We don't need you now, be on your way. I thank the Lord for love like ours that grows ever stronger. And I always will be true. I know you feel that same way too. Oh, I love you more.
Good morning, Dwayne.
Hey, good morning, Dave. Welcome to the show.
Thanks very much. Real pleasure to be here. Did you, all your computer issues are resolved?
I'm good as new, man.
Good.
On top of the world. Yeah, one of our partners, Raj, hung in with me for 3+ hours, and we went through kind of rebuilding Windows because it got hung up in the midst of a Windows update, and to turn this on and switch that and automate that. And, oh boy! But anyway, yeah, just one more ring of the bell, Raj. I really appreciate your help. I would have been lost without you. Or I'd have been all day at a computer shop, and they might have fixed it and might not have fixed it. And I might have lost data or not lost data, but we did it. Handcrafted by Raj. Thanks, buddy. So how you doing? How's your weekend?
I'm good. Yeah, we had a nice weekend. We have some rain here. I'm wondering if you guys may have that as well.
We had some overnight, and we had a little overnight Saturday night.
Okay. Well, fair enough. Actually, I think it's stopped raining now, but it's very cloudy, and I think this is all coming from California, or coming from that direction, so south of us here. So yeah, really just a very, very volatile, beautiful markets that we have. It's a great time between now, I think, and all the way through the end of next year. Great time to be trading. Great time to be, honing your skills in these markets, because the opportunities are really there, day in and day out now. So.
This volatility is just, it's incredible. Yeah. It is some of the best trading opportunities that I've seen in since I started trading Emini Futures. I mean, it really is. It's not so volatile that you can't trade it, and you get like the S&P. The S&P's don't get spoiled, guys, because it'll go back to its really choppy behavior. But I mean, of late we've just seen some beautiful directional moves, and it's been awesome. Excited.
Yeah, so it's really good stuff. Same thing with some of the other markets as well. Gold and some of the other things are looking really good. So I'm happy to say that we can all put this to work in our trading, and just make sure that you protect yourselves in case you're wrong, because if you're wrong, you could be wrong for lots of money, and there's no point in giving back all your previous gains. So, I've seen it many times. The kind of people that will go in the store, have you ever been in line and the person in front of you is constantly reading his receipt? He got the receipt and he's standing there still holding up the line looking over his receipt that he just got. Often those guys are the people who care the least amount of their already existing profits. In other words, if they'd made gains, if they were trading, they'll stare at their receipt to try to find a 3-cent discrepancy, but they'll let the market move against them, 50 points in trying to not, end up wrong in a position. So we've seen that, and that's a bad habit, obviously, not something that you're going to make a career out of in trading. So, you just have to know your uncle point, and if you do know and understand where to put that, you move that up, and before you know it, you'll, depending on what your philosophy is about trading, where you place your stop is probably equally as important to where you place your entry, because if you place your stop frivolously, you'll be stopped out too many times. If you place it too far away, you're risking too much money. You have to put it at a place that makes real sense, that the market shouldn't be at that number, and then you can start moving it up as the market starts to confirm and so on. So there you are. That's my show.
Okay. So anything else going on in your world?
Well, we're preparing for our seminar, which is coming up over here in Las Vegas this weekend. Of course, that's a big thing, and those of you that are coming, we're very excited to have you come visit with us here out in Las Vegas. We're going to be talking about the square principle and teaching how we do what we do in the markets. For those of you that have been to Reflected Wave, many of you are coming to this. It can be tied together beautifully and in a really almost amazing way with what you can do with it. And some of the trades that we recently put into motion rely heavily on that principle. Our most recent S&P trade has quite a bit in it, and I'm going to show that at the seminar on Saturday and Sunday. I'm talking about this current move up in the S&P. We had since Wednesday or Tuesday of last week, so we're now almost a full week ago, we were talking about the importance of the $1,867 level. That level was very important to us for a number of reasons, and that if the market closed on Tuesday and Wednesday above 1867, that there would be a 100-point move in the S&P. 100 points. It's 1,000 Dow points. We're forecasting that. We're not coming in after the fact and saying, oh, look what happened. We're saying this is what is going to happen. And the market made a low of on Tuesday of 1861.50, but closed the day well above it, like at 1874, closed above it on Tuesday, and by the time most of our people got in, we were in the late 1890s and in the early 1900s, and then we offered on Friday another entry, which was that we were expecting the market intraday to pull down from 1925 to about 1918 to 1917, and that was another long entry point. We got that, and we exited today, up at the 1966 to 1967 upside target. A lot of that trade relied on squares, on the square principle. And there's another number above us that they will probably reach today that is also related to the square, and that is for people who may want to hold for that final move. But we're inching in now that we're speaking about the S&P, we're inching in on the next important daily top that's going to come in, and that's going to be a very important juncture in the market as well. So I'm excited about that, and we'll see how that plays out here. So basically, with regard to the S&P, this is for us. This has been one of the larger moves in some time, where we could call for 100 points of directional movement. And the market was tricky, like it always is. If you take a look over the last, if you were to put up an hourly chart and take a look from...
That's what this is.
Yeah, you can see that you don't see the gap so much there, but...
No, this is Globex.
Yeah, that's okay, but from the low on the 29th, they gapped up onto the 30th. They pulled back and made a new high, then they pulled back, and then finally we gapped down again on the 2nd, which was Friday, and that was the final flush to try to get everybody off this trade, because that's what the S&P tries to do, is it flushes back and forth to disorient traders, and then it finally gives you, and we talked about this in our meeting, we told everyone the reason we're not trading the S&P, we had a slower week in the S&P last week, we were waiting for this move, and the way we described it was that there's going to be a lot of potholes and flips and back and forth, and then you're going to get to very smooth highway. And we waited for that, and on Friday we got the indication that that smooth highway was underway, and you can see how smooth it is. Though the S&P hour by hour is moving higher and higher, that's because it got the, all the choppiness out of its system and is now running to complete these targets. And of course, in order for the market to make a move of this size, there has to be some commensurate force there that's going to present itself in the form of price movement that would move it this big. So I was describing the other day, or even today, that if you had the ocean and it's, you got a small wave in the ocean, if you know the size of the wave, when it hits the sand, you can pretty much calculate how far that wave, that energy is going to take it. But if you have a larger wave, you can also calculate how large that's going to take it, and both of them have the same odds of being correct. So that's why I've said for quite some time that distant price targets are no less likely to be reached if you're measuring the theoretical wave correctly. It's going to be reached with the same accuracy as a nearby target. And other models that are looking purely statistically at the market, that is, that they're not attempting to understand the market, they're just attempting to take the information and run it statistically, they will find that the odds of being correct about a faraway target are dramatically less good than being correct about a nearby target. And the reason the difference is that there's no difference in our case, and the difference in their case is because they're looking purely statistically at raw information without trying to understand the source of that information. They're simply saying, here's a stream of information. What are the statistical odds that this stream of information would do one thing or the other? But that's why I'm such a big advocate of understanding the market as opposed to simply just relying on statistics or statistical analysis of data as opposed to understanding the market itself. It would almost be like somebody looking at an individual person and trying to understand all of the cells in the person's body without understanding that those cells make up a person. Or you gave many, many years ago the analogy of a little man riding on the inside of your leg, on the backside of your knee. He's a little guy in there, and he's trying to understand why your leg moves this way sometimes and that way the other times, and sometimes it stops moving at all. And he's just coming up with statistical odds of when that leg is going to move, but obviously he doesn't understand that it's connected to a whole body and it's connected to a person. Well, he'd be in a much better position if he understood that, because then he wouldn't have to run statistical sampling to try to determine what the odds are that something's going to happen. He could actually know with greater certainty that a very specific thing was going to happen, because he understands that that leg isn't connected to itself only. It's connected to a body, and it's a human being, and that human being is getting things done that day and so on. So, I don't think there's any limit in the physical world. I don't think there's any limit to what man can understand. We certainly have come millions and millions of miles from what people might have believed just a couple centuries ago, let alone 1,000 or 2,000 or 3,000 years ago, where, what would be, the very sand people were walking on back in the old days of old, that sand is in our computers. It's running the world. That sand they were walking on, that silicon, is running the world. Who would have guessed? Who would have known? So I think man has the capacity to understand anything and everything in the physical world. Not completely. I don't think there's any complete understanding, because it all goes layer by layer by layer by layer. It keeps getting deeper and deeper. But we can understand it to put it to practical use and have it improve lives and so on. Electricity is a great example, and any other number of ththings that man has done. We used to stare up at the skies and wonder what the big lights in the sky were. Unbelievably, now we shoot men on rockets and we land on those things. It's just incredible what we've been able to do. And that's no discount, nor is it any any other way of thinking about it, to the spiritual side of life, saying, well, what about that? Well, I'm only addressing this life right here, right now, of science and of externals and of the universe and so on, that we can, man can understand anything he puts his, it's like your mom used to tell you, you can understand anything you put your mind to. So, that's how we try to think about the markets, and so that we can have investment opportunities that are sometimes extraordinary. And yes, you do need the volatility to be there in order for those extraordinary things to happen. So there you are, Dwayne. That's that's my little bit for this morning. I don't know if you have...
Dan wants to know, Dan H., what is today's final target according to David?
Well, we've already reached today's final target according to us, which was given out again a week ago, but we do believe that there's a good likelihood that we're going to see 76 and 77. We messaged this early this morning that although it's not the same trade anymore because we've already had the full 100 points, but there's actually quite a bit more that can happen between today and tomorrow, and we think it's quite likely that we're going to see 77, 78, I'm sorry, before this is ending. And that's a little bit more of an aggressive trade, but it's good enough for us to have said that, that's something we think is likely going to happen. So that I would defer at this point, since our 100-point target has been reached. I think we would defer at this point to, unless we have some new thing come up, to just letting the market continue. If we get some opportunities along the way, we'll take them, some shorter-term opportunities and so on. We'll take them at this point. And you can always sign up and take a trial and check out what we're doing and see if it's useful to you. For some people, knowing that a big move is going to happen isn't necessarily a great piece of information for them, because their scale of what they're looking at may be very, very different. To us, it's very important to know what the bigger picture is. We can utilize that as part of the information that helps us put together smaller trades and larger trades and so on. So there you are. I do have a couple of charts I can show, and then we can talk and take some questions.
Okay, yeah, sure. Let me see. What other question there was? Is David looking for the next higher number today near 74? Will that bring into play the coming daily top? That was a question from Tim, but I think maybe you just answered that.
Yeah, it's actually more than 74. We're at 73 now. I think it's 77 to 78 is really important to us, and that number has been important to us in the past. That's not just a now number. It's been important previously to us. And it's a little different of a trade when you're buying it up here, but it still is. We think it's aggressive, but we still think it's worth for aggressive traders, maybe that may be interested in trading up to it. Clearly, we have a very, very powerful force underway here, and I wouldn't worry that you're about to pick a top just yet. So, by buying it, but it's only now, from before when the market was at 66, 67, it was a better trade then. That's a 10-point trade, but at this point it's still moving, and I think it's very likely we're up 30 points here today. I think it's very likely we'll end up seeing those kinds of completions. But again, that's a different trade than our original one. It's got probably more aggressive. It's probably considered more aggressive, I would think. And I'm not against aggressive trades as long as they fit into a context that overall it seems like you've got the odds in your favor. If you want to see how true it is that odds do play a part, like the less you know, the more you have to rely on odds. That's the problem with not knowing, is that you have to start relying on odds of things happening. And we all have to rely on that anyway, no matter what you know, but the odds get much more in your favor with better knowledge, and that's why I think it's wise for people to really try to study the markets and understand them, and to whatever level and to whichever way they want to think about them. Everybody will improve their trading rather than just following something blindly. I think the understanding makes a big difference in the end. We certainly don't want to be statisticians sitting here flipping coins and saying, well, we have a 61% chance of being, and that's where the whole random walk theory comes from. The random walk theory is a result of men looking at something they don't understand and just turning it into a bunch of statistics. And statistically, it looks like a random walk. But so would what you're doing every day would look like a random walk if the person didn't understand that you were getting up to put your clothes on so that you could go to the store and buy food so you could bring it back to your house and feed your family. If he doesn't understand that, then your movements are going to look random to him. Okay, this is that.
If I ran a sports book in Vegas, I would call it the Wizard of Odds.
Well, there you are. There you are. There, God, that's a good name. I'd be surprised if somebody doesn't already have that.
Okay. Cards are yours.
This was on. Let's see. This was the 29th. This is the trade we're talking about. Yesterday's, meaning that daily close. This was on Wednesday, September 30th. So this green bar here is when this message was put out. But we were talking about this day and the fact that they closed at 1874.50. We're looking for a 100-point fast advance to 1967 or higher into early next week. And today, Monday, is early next week. They did close the next day above this as well. And with Jerry's help, Jerry Fagnan helped us with the getting traders into this and so on. The majority of the people got in anywhere from the late 1800s all the way up to 1917 for the final run up here. So we had a great trade here, and I'm delighted to see that the markets are acting this well and that we can, do that kind of setup and trade. This again, obviously, like I was saying before I move on, there's a force that had not yet expressed itself at this point, and that force can be seen theoretically, and when it sets up, that force is measurable and you can say certain things about it, and we did, and so the market had a great move. This was that same day. This was Friday, where my cursor is on the right-hand side chart. That's Friday. This is during Friday in the middle here. The market was trading at the time at about 11:25, somewhere around here. We indicated watch for a test for 1918 to 1917 for new long entry. So for people who had not already been long, they could wait for 1918, 1917, and the market pulled back to a low of 1917. That was the last group that got in for the continued move up to where we are now. It's 1972. So again, a really fantastic amount of volatility. Beautiful long entry. This was gold on Friday. Buy gold between 11:30 and 11:29. This is gold selling off and made a low of 11:29.60. That's between 11:30 and 11:29. And gold right now, today shot up to 11:41. We're trading at 11:36 right now. We're in gold for a longer move. We're not trading gold for a scalp or for $300 or something like that. So we think there's more to this than just that. I hope we're right, because you can't, it's all theoretical until it becomes actual. And, no matter how many times I've seen this myself, you still have to treat it like you might be wrong, that there's a possibility that something else could happen. We didn't, I don't know if we finished up on Friday because of the computer problems, but we had some other stuff that happened. We had the Japanese yen looking for a breakout from 83.70 for a 55 pip move up to 84.25. They got up to 84.34. The Japanese yen is down decently today, but I'm seeing more and more in the Japanese yen that seems to be more tradable now than I think I used to think. So I won't go over all these, but the main one is this. There's our big trade. And I think higher prices are coming before it's over. I think we're still going to see further advance in the S&P before this is over. So there you are. And Dwayne, I think I just clicked those over to you.
Okay.
So that's our stuff. There's a number of other markets that are interesting, and if people have questions about them, we may or have something to comment on.
All right, let me go to the chat box. Guys, you got any questions? Type them in. Connie wants to know if you see any weekly tops coming in the S&P 500.
Well, I think more importantly, and those of you that have been to Reflected Wave, you know that we have a daily top that is going to be due now. And so that's actually what's capturing our attention more than the weekly right now. I'd like to see, for Connie's sake, I'd like to see a lot more movement up here, to be honest with you. I think that would be a really good for the market and for some other things that may come later. We'll see how far they go. But right now, the daily top is the one that I think is most important to us. And that daily top is right around the corner now. So for those of you that, I won't go into all the details, but for those of you that have a Reflected Wave, you would know at this point where that is. So and I don't mind saying where it is. It's basically due tomorrow, so it's pretty close. If you're at least if you're using our platform CQG. If you're not, it's probably very close to that time frame, which is tomorrow, which is Tuesday, October 7th or October 6th. Sorry. So hope that's useful.
Okay, let's see, chat box. I think we may have covered them all. What do you got for bonds? Anything in bonds?
Well, it's interesting. I don't have the bonds up right now. Do you have them up?
Yeah, right there.
Okay. Yeah, this whole 157 area is, I mean, to us is somewhat important. I think we do have some indications for the possibility of somewhat sharply lower prices in the bonds here. But I think before we take that early indication, right now we want to see a little bit more of how the market acts. I want to get some evidence that something bigger is at work in the bonds coming down here. I want to see that. So that's what I'm waiting on right now, is a little more evidence. But if we do get that evidence, we would be shorting the bonds, and this would take us, it's not something immediate like it would happen today, but it would take us into next week, we think, if that move happens. Now, if it happens early and they give us an indication, we'll probably take it. We're in the what I consider to be the 1 week early for the expression of this theoretical force again. But right now, this decline is not enough. This actually doesn't even exceed the force that we thought the bond market would have to the downside quite yet. So we really don't want to step in front of that. We still need confirmation that something larger is at work than the current force that we were tracking. So that's what we're waiting on in bonds. So I hope that's helpful. The bond market's also been real volatile, very big moves, and we didn't get the rate hike that people were thinking of, and it's really possible that we won't see it at all this year. That still is a possibility. That was, I originally felt that they weren't going to do it in October at all, and I said so on the radio station here, but the only reason I thought that was because of the position of the bond market. And there are other factors that are involved, but they don't have a whole lot of bullets left in their gun. At some point, with the interest rates, again, this low, the only other thing they have as bullets, the Fed, is verbiage, is being able to say things and say, well, this is what we are planning on, or this is what we think we're going to do later. And that verbiage is taken seriously by people, and that could have an effect. But I don't know what else the Fed can do at this point. They can't really lower, they're not going to lower interest rates anymore, are they? I don't think so. So we may get through this year without them raising it at all, but we'll see. I still kind of subscribe a little bit to Burwell's theory that the government doesn't really want to start raising interest rates in the presidential year, so that they do have some impetus to get it done this year. But I don't think there's anything in the bond market right now that justifies a rate increase, but we'll see. So we're waiting on that.
Okay. All right. How about the euro? Got anything going on there?
No, I don't right now. I mean, we do have something in the dollar that's quite possible that we're looking at, which, if we're correct about the dollar, would actually send the euro lower, because the dollar might move up. So, but we're not ready for that yet. We're just considering that right now. We're in the process of determining whether or not, that move is really there. And this is the dollar that Dwayne is showing right now. So we're going to wait a little bit here, see if there's some further action. If we are going to do this trade, it probably takes us into midweek for the move. So we do have some time here. We're going to wait a little bit more here before putting it out. And we may, like I've said so many times, we may get in at a higher price, and we may make a little less money with, but with more certainty. So we'll see.
Okay, now Dan wants to know, David, should we try to short the S&P at its coming daily top?
Well, we are going to. It's very likely that, depending, though, on how that top gets put in, I mean, there's really conditions that would surround that. And I think at this point, I agree with you that we would be shorting territory, but there are some things they could do that might make us scratch our heads or wait for a little something further to happen. Sometimes you get really beautiful examples, and sometimes you may want to wait because there's some other things at work. So we'll see. I really do want to see, honestly, I would like to see the 78 level, 77, 78 level get completed. I really would like to see that, if not higher. So I'm really not interested at this point in any short position in the market until we get into tomorrow or perhaps Wednesday. So just be careful with that. You know, sometimes the ends of these moves can be pretty big. You know, I mean, we're up 30 points today, but it could still pop pretty good. So
yeah, we still have, as far as our weekly zones go, we still have a lot of room to the upside.
Yeah.
A whole lot of room. All right, what else we got in the chat box? We talked about the S&P. We talked about, Richard says, how about the 1984 area as a target?
How about the 1984 area as a target?
Yeah, you know, kind of they say, how about those Cubbies or something, or about those Yankees? He says, how about that 1984?
Well, it looks to me like you have a target similar right on your screen there, and let me.
I just put a little line there because that's an area that I have of some interest in. It's not a weekly zone though, but
well, certainly
it's an area.
I think certainly there's probably some importance in the mid 1980s. I would agree that that's probably going to play out, but I do have to say again that I'm only interested in that probably, I mean, kind of goes without saying, after we see this, you know, 1978 level get tested. I really want to see the market prove that this advance can do that, not because it's a roadmap, because it isn't, but because it would be normal behavior for the market to do that. If for some reason, and the market's done nothing wrong yet, but if for some reason between today and tomorrow we were unable to reach 78, 77, 78 on the upside, that could be a very, very important early sign for tremendous unexpressed weakness in the market. So that's one of the reasons we're keying in on that number, which again has been important to us in the past, the 1978. And if they can't get to it, we're not forecasting that they can't. We're saying if they can't, and we get to Tuesday or Wednesday of this week and they can't do it, wow, that could have some super significance, especially given how tricky the market was in trying to shake everyone off before this move, and then the move happens, and if they can't get to that number, that could imply for us tremendous weakness in the market. That's not what we expect to happen, but that's our response would be like, wow, that could really mean something here. So I hope that's helpful, but I would not short it today. I would not step in front of this today, unless, I mean, depending on what system you're using. But for us, if you're looking for a very, you know, small scalp trade or something, that's your own thing. But for something bigger, I would not step in front of this yet. So there you go.
Okay. Let's see. Richard said, when the VIX prints around 18, Richard K., when the VIX prints around 18, look for puts and or tops.
Okay. Well, that's using the VIX, and the VIX, for periods of time, the VIX can be very useful. I don't know if you've watched that a lot yourself, Dwayne, or not.
You know, I really don't.
Yeah,
Mike Reed
well,
does.
and I don't either. I don't either. I know Mike does, and it goes through phases. The VIX goes through phases where it can work really well, and it goes through like indicators of any kind, but it also goes through phases where the VIX was intended or was supposed to be, a broader based view of the market that isn't going to necessarily have the ons and offs that some indicators might have. But the VIX itself does, in fact, have ons and offs. There's been periods of times where whole newspaper articles have been written about the VIX doesn't work anymore. I think I remember we talked about that on the radio program at one point, maybe a couple years back. But it does work. It is a good, if you will, overbought and oversold indicator, even though I don't really believe in those. But you just have, I think it's better to have another thing along with the VIX. I wouldn't just say, well, the VIX is at 18, let's go short. I would be careful because like any, quote unquote overbought, oversold indicator, it can ride down there at 18, 17, and 16 for weeks on end as the market continues to rally. It doesn't necessarily stop the market at that point, but it won't. And what people do with this is they say, well, look, the VIX got down to 18 and it never went any lower, so 18 is a good number. I'm not saying that he's saying this. But what they don't do is they don't look at the market and see that the market went a whole lot further while the VIX was testing 18. It bounced several times and so on, and all that sticks in the person's head is, well, it's 18. So when it gets to 18, that's important. It can get to 18 and just pin itself there and hang there for weeks on end while the market just grinds higher. So I think it's good to use something else with the VIX maybe as a very good indication, early indication. Thank you. Very good early indication that some other more refined indicator or approach would help you to get short. So I hope that's useful.
Okay. All right. And Richard says he's got ES. He has a zone at 78/83. Okay.
Okay. Yeah, the mid-80s is probably pretty important. I mean, I would agree with everyone that that's probably an important area, and it very easily could be reached and tested or exceeded. So I would not be surprised in that, and that's why I'm saying any trade beyond, for us anyway, any trade that was beyond the forecast area of 67, 68, 1967, 68, at that point we're getting into a different kind of trade where there's probably a little bit more aggressive, but that doesn't mean that you're going to lose money. That just means that you're taking on a little bit of extra uncertainty, and that uncertainty being uncertain, being not knowing, means that there's more that you don't know about that could come into play, and we want to avoid that to one extent or another. We're always going to take on risk in the market. I mean, that's the thing. There's no reward without taking on risk. No one's going to give you their money unless they have a chance at having a shot at your money. So that's the risk, is that they're just not going to pay you just for nothing. They're going to pay you because they have a chance, the other side of the trade has a chance to get some of your money. And so the risk has to be there in the way that the markets are set up. And that includes stocks as well, which is a whole different, that's a very different way those markets work. And in the end, we try to take the very best risk reward or risk ratios that we can get, where the risk is as small as we can get it. And at some point you just say, hey, it's time to be in. Just buy the silly thing. And you do that. And we do that when it comes to that point. For us, when we say the term buy the silly thing, that means we don't have any other choice at this point. There's no other decision to make about the market except just to get in. There's no other thing, nothing else to consider. It's actually a very freeing kind of feeling because there's nothing else to consider really. It's just time to be in. Those don't happen every day. This last trade on the S&P was one of those, but that doesn't happen literally every day for us. So there you are.
Okay. David, I think that's all the questions, and it's almost 1:45.
Yeah.
The only thing we haven't looked at, what haven't we looked at? How about crude? Got anything going on with crude?
Well, I am looking at crude. I wish I could say I had something on it immediately. We're looking at it on the intraday now as well. We started to follow that because there's big enough moves in crude intraday to actually, do something with that. And but as we sit right now, I have no generalization or more specific thing on crude right at this moment. And we're probably going to, our total number of indications this week are probably going to drop off a little bit because of the upcoming seminar and whatever little things that happen. But we'll put out as many as we can. And if I have anything on crude when I come back tomorrow, I'll be very happy to put it out, Dwayne.
Okay, very good.
Yeah.
Okay. All right, David. Well, thanks so much for everything.
Thank you for having me.
I know you got to go, so.
Yeah. We'll see you here tomorrow. We'll be back again
tomorrow. We'll be here. All right. Take
Thanks
care.
again for having me. Bye-bye.
All right. Bye-bye. David asked, will next week be a normal week for you, David? A normal week. As far as I know, if you're referring to a seminar, that's a that's a weekend thing. So no, that won't affect him. Okay, I don't know if Garrett's going to be with us today or not. I'm checking, and Bert's checking. I failed to send him the updated Wednesday, or October, I mean, the updated link. So I'm going to give him just a minute here. We've already covered the Concierge Trade Alerts. We made it all the way through everything. We made it through gold, which has not triggered today, had not the last time I checked it. Let me look. Gold. Long above 42, nope. 41.60 was a high, and short below 11.30. And we did trigger there. 11.30 we triggered, and we got 4 ticks. A 4-tick move, I consider that a stop out. At 4 ticks, if you're trading the 2420 blueprint, we do move our stop to break even at 4 ticks. But when we're trying to get low, when we're trying to get short below 11.30, okay, then below 11.30 puts you at 11.29.90, and so 60. Really, that's 3 ticks. So for all practical purposes, I would call that a stop out. Now, after this huge day that we had back on Friday, to have a day such as this where we consolidate, work our way back and forth, not unusual at all. Okay. So that's gold. We already had talked about that. The Russell, the alert there was to be long above 11.22. Now back on Friday, I mean, we had a whale of a day on Friday. Short below 10.93. We got all the way down to 74. That's 19 Russell points. That's $1,900 per contract. Okay. Now, someone in the chat box has said, would you actually trade in front of the non-farm payroll? We always teach our students, partners, to stand down in front of a major news event. Okay. Now, that's Fed, that's WASD. That can be non-farm payrolls. That can be, for some, crude inventories, natural gas inventories. With that said, some of the most profitable traders that I know are those who actually do trade the news. They have a knack for that. They have a skill set that they've developed, and they trade the news, and they trade it quite well. I personally am not one to stand in front of a news event. I've traded the Fed announcement as an example. I've done well, and I've done not so well. And when I started to see that the results of trading the Fed announcement for me personally were more like gambling results than they were trading results, I said, I think I'll just stay with the plain vanilla. When you have something such as the Concierge Trade Alerts, it does allow you to put in a bracket order that says, I'm going to be short at this price. I'm going to take my profit at whatever your target is your target 1 point? So with the Russell, to make $100 per contract per day, which is the 2420 blueprint, all you needed was a move down to 1092. You know, this happened in the 8 a.m. hour. So let's say you didn't take that trade because of the fact that there was a major economic report. You also had the opportunity here to be long the Russell on Friday at 1102, and that took you up to a swing high of 1114. And so that would be 12. Russell points are $1,200 per contract. So still a nice day's work. All right. High so far today, 32. So we've got a 10-point move in the Russell today. Just sort of all of these indices, the Dow, the Russell, the S&P, all just making this incredibly smooth move to the upside. Now, on the Russell, I'll just tell you. Looking to see where we are compared to where we may go. This move in the Russell, I mean, we're already up on the day substantially. This is the Sunday night open. And where's Wall Street? So we had a tremendous gap higher opening this morning from Friday's close. See, we actually gapped lower on the open on Globex last night, but this is the 9 o'clock hour. So we had a gap higher opening on Wall Street this morning. Already put in a nice move, but the potential for us to continue to climb, maybe as high as even 1140 plus, is there, and if we don't do it today, it could happen tomorrow. So 2 great back-to-back days in the Russell, 3 back-to-back actually, because this one was a short trade. The Dow, again, that one, that's just a huge move in the Dow. What do we got? Here's my calculator. Now on the weekly zones in the S&P, I think there was a typing error, and we talked about that in the live trading room this morning. And I think most everybody already figured it out. If you didn't figure it out, tonight when I send out the alerts, I'll highlight it, and then also I will. It's not a number that we've had to be concerned about. I would have already sent out a notice, but we haven't traded in that area. In fact, we're the other end of the spectrum. Okay, so it's really not an issue. So if you didn't notice it, don't concern yourself with it. The Dow's currently at 16,630 minus 395. So that's a 235-point move in the Dow today based on the alert at 16,395. At $5 a point, it's almost $1,200 per contract. And it doesn't appear to be getting tired. If we throw some volume out there, the volume's starting to wane, but then so does it on most days. Now, on this day, we saw it start to pick up 2 o'clock, 3 o'clock. Here, we saw it pick up in the final hour. Final hour of Wall Street. There's always that little 15-minute hangover. Okay. And so now we've all heard the increasing price on declining volume. I think that holds true with stocks much more than it does with the indices. So I'm not, the fact that we're climbing and this is falling, I don't see that as a huge divergent type bear signal. So I'm not going to worry about that. Let's see, soybeans, we covered that. The alert was to be long above 82. We put in a high at 86. To hit our daily goal, we needed to see 84, which is right there, 84. So that happened in the 11 o'clock hour this morning. We triggered and hit the daily goal. Okay, and we've now doubled the daily goal. 2 cents per day is the same as 2 points in the S&P. There are 4 ticks to a penny and 4 ticks to a point. 1 penny equals 1 point in the S&P. They both pay $50, $12.50 per tick. Euro, we covered that. We had some early shorting opportunities. We only need 8 ticks in the euro. Now let's see. 1,000 by 1250. You need an 80 tick drop to make $1,000 per contract. 80 times 1250. So 11,250. So 250 or 1250 minus 80. 1250 minus 80 would be 1170. So we would actually need to see price get down to 1170. So not that far off. I mean, we had a nice little drop there in the euro, and that may not be over as well. That's 60. There's 1170. I mean, we still got a ways to go, but very, very nice move. Crude oil again, that one did hit $1,000 per contract today. A $1 move in crude is $1,000. A $1 move in gold is $100. The difference being there are 10 ticks in $1 in gold, whereas in $1 in crude there's 100 ticks. Both ticks pay $10 per tick. Now crude seriously looking like it wants to come back. Over here we caught the rally, and then we came back to test the important price, important area, made a run, and then here we come again. Okay, so we'll see how that plays out. So that's crude. We've looked at bonds. Bonds continue to fall. 158.09. Okay, so we just hit the $1,000 per contract move in bonds. 158. So we need 157.09. Is that it right there? Yeah. All right. So if you took the bond trade and you're not trading the 2420 blueprint, you're just trading, and you hung on to that. We've seen so many $1,000 per contract days in bonds of late. It's just incredible. I mean, you want to see incredible? That's incredible. We had it Friday. Had a couple of quiet days. But for the most part, bonds have been, you know, good. Real good. And the S&P is still climbing. Now this number here, 84-ish in that area. What I did was I drew a fib extension from Okay, I just got a message that Garrett is going to pop in, so we'll hang out for a minute and wait. All right. So from this low, we had a little double bottom here. But from the lowest point on that bottom to the swing high to the retracement. Now, here's sort of an unusual little move here. This was the higher high, this was the lower low. That's probably the better spot. Okay. So what does that do? Instead of giving us a 2000, 2001 price up here, puts us at 1994. Okay. And that still keeps this number here important. Okay. All right, so we've covered everything twice, I believe. Just want to make sure because I missed everything on Friday. Friday was good across the board. Oh, I said I would tell you how to, if you didn't know how to get to the Google Plus page, I would show you, and I will. It's quite simple. Let's go to our home page at cfrn.net. Right here, Emini radio blog. Watch recent broadcast. There you are. Now, these are all charts from Friday. Okay. So now you know how to get there. Richard asks, is the highest trading zone at 2040.41 correct, as it is 79 points from the next zone down? That is correct. It's a huge zone, probably the single largest zone I've ever had, Richard, but that's how the math played out, and so I have to go with it. And I thought that would bring some questions. Yes, true story. Now, does that mean we're predicting that the market's going to go to 2040? Well, here's what we're saying. If it does make it to 2040, we do not expect the week to close above it, okay? usually the highest weekly zone or the lowest weekly zones. Those are the extremes of the playing field. And now last night, when I was computing the zones, the market was pretty quiet. We went sideways there for quite a number of hours. This could lead to substantially higher prices. But as I said earlier, trees don't grow to the sky. So if we come from this low to this high, okay, a 24% retracement from here would bring us back to our current alert at 1953. And as we know, important prices, important areas are almost always tested. So that would not surprise us to see price come back here. If we came all the way back to the 38% retracement, then that would line up with the Globex opening last night, which was right there. Okay. So both of those are possible, and then that could provide the market with the energy to put in another substantial leg. So we'll do what everyone else has to do. Wait and see. All right. Take one more peek here. All right. All right, Garrett's having some difficulty getting logged in, so we're going to wrap this, call it an early Monday, and just scan down one more time, make sure I didn't miss him. I don't want to hang up on him, but I also don't want to keep you hanging if he's not coming. So. Okay. All right. Well, I don't know about you, but I got a ton of things to do today, so I'm going to hit it and get it. All right. I'm just so glad to be back on the air today. And to those that asked earlier, yeah, we will be streaming live on YouTube again tomorrow. Once I road test everything tonight and make sure that it's operating properly, because I don't want to blow anything out now that it's working again. Alan, could you give me your opinion on daily corn? Corn. Let's see. Corn, December corn, daily. Okay. Here's daily corn. Richard, your question, will David's view on the S&P be posted this evening? I'm not sure what you're talking about. Yeah, you have to clarify that for me, Richard S. All right, so this is December corn. Yeah, every day I post the show. Yes. Yeah, if that's the question, Richard, yes, I will be posting the recording of today's show this afternoon. I do it every day. Except Friday when there was no show. So, you're welcome. My pleasure. No specific time as my workflow allows. So Typically, it's up by 5 o'clock Eastern, but I can't guarantee you. What you can do is you can subscribe to our YouTube channel, and you can subscribe to our Google Plus page, and you'll be alerted as soon as it's uploaded. That's one way to do it. Okay, Alan, from the swing high back in June to the swing low in August, from this high to this low, we've seen a 38% retracement. Then an attempt to go lower that failed, and now we're up against that 38 again. Now we're on a daily chart, so we've tried 4 days to get through this area, and it's proven to be a bit of a tough area to get through. And if we look left, we've got this and this, and we've got this gap here. Are you looking for an intraday trade? Well, you said the daily chart, so I'm guessing you're looking for some bigger type move. That's just a fast and easy if you're looking for some type of a swing trade. Let price get through this troubled area here, and then this little window of opportunity, 407 to 417. I think that looks very nice. I would be willing to participate in that. I would also want to see how it looks, what it looks like on the day that it triggers and what leads into it. And likewise, if we fail up here, okay, we've tried here to get through the 38. Remember, these are reverse fibs. Swing low, swing high, the swing low. Did the 38 once, got knocked back down to the 24. Did the 38 again, tried to knock us down, but we didn't go all the way back. And so the chance of us, popping out to the upside are good. So, waiting days to go 407 to 417, I know that's a 10-cent move. I don't know that that's really what you're looking for. What you could do at 417 is you could trail your stop, and hopefully you'll get through 17, and it will, you may have more in it to the long side. But I think once you get above the 38, you're going to run into some turbulence based upon this. I think that's going to be an issue. On the south side, 372. You had a 417 target too. Good. Okay. On the short side, maybe 372. Hmm. 372 to 365. That's not much, but it's a pretty. To make that worth your efforts, you got to put some size on. but I think that's doable. Again, these are both trades I would want to look at on the day when they trigger and all the surrounding conditions, but just at first glance. So if that helped, as you said it did, thank you. That's very kind, and I'm glad that I could be of service. Okay? All right. All right. It's all right. Okay. All right, Garrett, I'm sorry you had difficulties getting logged in. My apologies. But we're going to go. Let me put this back here like this. We'll watch this thing and see what it does. Guys, thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinions of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with the licensed securities broker or financial planner before making any investment decision.
The following is a presentation of Mosaic, a community of faith, love and hope. We invite